so I'm sharing my screen. Jenny, I just want to confirm. I'm going to go back one screen. Have you seen that change? And then I'll go back again.
Yes, I can.
Great. Thank you very much. Well, perfect. Appreciate you setting up this time. For the group here, I just want to quickly introduce myself and welcome you today to today's webinar. My name is Jesse Powell. I'm here from Avalara. And I'll go back to the screen. You've got two companies on the line here. You've got Avalara as well as Paladin, who I'm sure you're very familiar with. I'm going to present it on behalf of Avalara. A little bit of background on myself. I've been here for about 3 years now. I'm a business development manager with Avalara and work with all of our integration partners like Paladin. Prior to my experience here, I was a microfinance advisor over in Africa, of all places. Got to live in some pretty interesting worlds. So that's where that picture is there. If we ever get on calls, happy to talk about it, some further dialogue down the line here. Enough about me. What are we going to talk about today? We've got about 30 minutes with each other, so I want to move fairly quickly through slides because we've got a few big topics. The first thing I'll do is we'll make sure that everyone understands just who Avalara is. It'll have a lot more clarity and maybe give you some more confidence in the rest of the presentation if you just understand who we are as an organization. We're going to spend the meat of our time a little bit around sales tax 101, sales tax basics. Maybe that's a refresher course for some of you or brand new topics. I hope that this is appealing to kind of people from all walks of life there. I'll have a brief little bit of information about tax automation just so you understand what that means and what that looks like with Paladin and Avalara. And then lastly, we're going to leave time for questions should you have any. Please feel free to add things in the chat window. Jenny will be monitoring that. If something really important comes up, she can absolutely interrupt me and pose the question to the group. So let's get started, jump right in, and just talk briefly who is Avalara. There is a little bit of a word vomit on the screen. I think that's too much words for me, but just to basically boil it down, Avalara is a tax automation business. We create software that alleviates the friction or the pain of dealing with tax compliance. Avalara has been doing this for over a decade now. We've been in the business for about 12 years. We are the very first business to ever create a purely cloud-based sales tax solution. Prior to Avalara, if you wanted to make sales tax easier on yourself and you wanted to find a software company that would help you do that, it was very expensive. You had to buy an on-premise IT solution. You had to maintain it. Just a lot of work that went into it. So as cloud-based technology has become available over the last decade and really widely adopted, really Avalara has grown with that trend. We are the largest sales tax provider in the entire world now. We've got over 20,000 active customers on a monthly basis that simply don't ever think about sales tax again. We've got hundreds and hundreds of integration partners out there. Paladin is one of those, and what that means is they've gone and done all the work for you and made our service simply available within your existing workflow. We'll talk a bit more about that at the end of this webinar. From a volume scale, we're doing over 1,800 tax decisions a second now. We file over 1 million tax returns a year on behalf of all of our clients, and we're doing this in about 200 countries. Some things to think about is you've been a customer of ours. First of all, I'll say thank you for your service, right? You guys, if you think about it, when you buy things online, businesses today don't really try to do this manually anymore. Even in a lot of POS environments, the complexity of tax has gotten so hard, and it's just too cumbersome to manually ever track all this. So they have simply outsourced it. Technology is a very, very good way to do this, right? It's very repetitive tasks that are very rule-based. So some familiar companies for you to think about, like Groupon or Crocs or NetSuite, right? This is a very widely adopted service at the high end of the market, but also I'd say the majority of our clients are actually just simply running their business on QuickBooks, right? They're 2 or 3 person companies. They just don't want to do this anymore. The beautiful thing about this, though, is the scalability, right? We're not a very complex platform in its sense of usability because we just live within your existing applications, right? We're a decision engine that operates wherever you need tax to be calculated. Great thing also, right, as I mentioned before, they're pre-built integrations. So here's just a few of them. We've got over 500 to choose from. Huge, huge advantage that you have with Avalara's just ability to scale. So I hope that gave everyone just some brief background on us as a company. Happy to answer questions on that at the end of this. So please, feel free to jot them down or put them in the questions window. Now, the real point of, I think, our topic today is just around sales tax and really getting you prepared to manage this either yourself or maybe understand areas of gaps in your compliance process today. And I think the first thing we need to do is just establish a baseline around sales tax. This might seem like kindergarten things, but at the same time, it's really important we all understand what we're talking about. So briefly, sales tax, what is it? Sales tax is the consumption tax that's going to be imposed at the point of sale. So at the point that a material really changes hands, changes ownership. That's really what I'm talking about here in the United States. We're not going to go into international value-added tax today. Here in the U.S., there are 45 states and the District of Columbia that impose a sales tax. There are 5 states that don't have sales tax. A lot of people refer to them as the nomad states. I like to call them the oh damn states. You've got Oregon, Delaware, Alaska, Montana, and New Hampshire. They do not have a sales tax. And so for retailers, hopefully that's you, businesses, business owners, you're required to collect sales tax from consumers, and you must be remitting it to the jurisdictions on which you have been collecting. Pretty basic stuff, I understand. So how important is sales tax, though? This may be a bit new. Just a little bit of a story around sales tax, and I'm not going to go back to the beginning of it, but let's talk about maybe in the last 10 years. Budgets at the state level are not doing very well. There's some major budget deficits, kind of year over year, around $50 billion is what I'd say if you kind of aggregate them together, and that's not a small number, right? They're somewhat clamoring. They're trying to identify how can we crawl out of this hole. And they know sales tax is really important, right? They have about almost half of their tax revenue is simply coming from sales tax collections. And so states are trying to figure out how can we get out of this hole. Let's look at existing revenue streams because no one likes it when states create whole new tax regimes. So they try to build off the ones that they already have. And they've identified that they are missing out on a lot of sales tax collection. There's about $25 billion every year that's going uncollected. That's in e-commerce, that's in just simply businesses that are not being compliant. So there's this gap, and they have the right to collect it. They just need to figure out how can we do it. And that could be slight law changes, regulation changes, maybe even a little bit more of an enforcement, greater audit resources, things of that nature. So this is a really, really important area of emphasis for states today. Now for you, how does this impact you? You're an unpaid agent of the state. That's kind of a fun way to think about it. I guess not fun, but it's the reality is the cost of doing business is you need to now collect and remit the sales tax. And you're not in the business of doing that, but you just want to comply because you don't want to be left holding the bag, right? On average, audits are about every 5 years. What you'll see is you'll get in a little bit of an audit cadence with someone, with a state or even a specific auditor. If you think about an auditor, they're like sales reps of states, and they're looking for a big sale, right? They're looking for a big audit. Even some auditors are even paid simply on commission. They're like contract auditors. They go out there and they look for the big fish because they get paid of the revenue that they bring into the state. Now remember also the impact of an audit, right? This can last over a month and can be a huge drain on you. And remember, this is, once again, not the point of doing business. And if you decide to put your head in the sand and not worry about this, and you say, I'm just not going to charge sales tax, you could not only be left holding the bag for the principal amount of tax, but also penalties and interest going back 3, 4, 7, 8, even in some cases unlimited amount of time, really back to the first day you started doing business in that state. So what should your goal be when it comes to sales tax? Your goal should be to make this as frictionless as possible, right? Make this a pass-through. Find ways to either create your own rules and your own systems, partner with a company, or have someone who's just a tax expert on your team who can set up strategic plans that allow for collections and remittance to happen really as a breeze, right? You do not want this to be something that takes a lot of time or resources for that matter. All right, so let's talk a little bit about how we manage compliance. Hopefully everyone has got an idea of sales tax in general now. Now, how would you manage this? I think about sales tax, and most people here at Avalara think this way, as a three-legged stool. And your business is just going to be representing the seat of this stool, right? You want your business to be flat, level, frictionless, right? It's on a playing field. And in order for that to exist, there are 3 incredibly important things that you must be doing. The first thing that you must have done is you must register with the state. You must do the right paperwork that says, I have a right to do business in this state. You've got to let them know you're coming. You've got to get a tax ID number. They have to give you a filing schedule, all of that nature. You must be doing that, and it's really best to do it before you have created a tax collection requirement, right? Think about the future, in advance of you having to register. Once you've been registered, you must have a collection process in place. We're going to talk a lot more about that here in a minute. But as I said before, every transaction you need to be collecting it on behalf of your customer at the point of sale, on behalf of the state, at the point of sale. And then lastly, you have a reporting obligation, a regular cadence in which you demonstrate to the state in paperwork, this is what I've done, this is why I've done it, and here's the money that I've collected for you. All of that somewhat is auditable as well. So let's go through those 3 pillars in a bit more detail. And we're really going to focus on this first one, I think, at least 5 minutes here, because this is, without a doubt, the most important concept you're going to have when it comes to sales tax. Where do I register? Really, if you think about that question, it's more around where do I have nexus? And if for those of you that word is new, let me explain what nexus is. Nexus, if you just looked it up maybe in a dictionary, and I put it on here, is a connection or series of connections that would link 2 things together. When you think about sales tax nexus, what we're talking about is the connection between your business, your company, and the state or the taxing jurisdiction that you're operating in. Now, nexus stems from a lot of Supreme Court rulings at the federal level that have been passed over the last 25 years or so that created a precedent that now states are trying to follow in line with. And the biggest one that you should be aware of was in 1992. It's called Quill versus North Dakota. Feel free to Wikipedia that if you'd like. But what that stated is if you have created a substantial physical presence within a taxing jurisdiction, let's just say states for now, within a state, you now have an obligation to get registered and start collecting and remitting sales tax on all transactions going forward into that jurisdiction. I even put that on the screen, substantial physical presence. Now that was a Supreme Court ruling in 92. And so every state now is, over the last 25 years, been passing laws that try to fall in line with that. And the problem is what is substantial is very subjective. Not everyone interprets that the same way. As you can imagine, all these 45 states and District of Columbia have all decided substantial isn't the same to everyone. But as time has gone, things that are very common like employees, inventory, any sort of equipment, even if you have 1099 contractors working on your behalf going from state to state, that can trigger this requirement, this substantial presence that you need to collect tax now. Be aware of things like trade shows. If you go for a certain number of days, do certain types of activities in certain states, that could be nexus triggering. So you really want to do a good job of checking state websites, Board of Equalization, Department of Revenue. They always try to give you some clarity as to what is their interpretation of substantial presence. Beyond that, there's other things that have changed in nexus laws, like affiliate business relationships. That would be something like a business partner or maybe shared services of companies. They could somewhat now share their nexus footprints with each other. That's just a unique one that is starting to really pop up a lot. Click-through nexus is something that's been adopted in about 18 states now. That's where you have a business relationship with someone that you send them kickbacks because maybe they have a link on their site that pushes business to you. Big companies like Amazon and Overstock really got caught in this in New York, and that has somewhat spread. Less of an issue, I think, with some of the smaller businesses that I speak with. Another one that's coming down the line that I'm just trying to give you some forethought on is that eventually I think one day there's a lot of laws out there that might get rid of this whole idea of physical presence because e-commerce has become so big. South Dakota just passed a law this year called economic nexus, that if you simply make over 200 sales or $200,000 worth of sales into their state, you need to be collecting tax. That's a huge contestation against the federal government's passing of Quill versus North Dakota, and we're going to really see how this plays out. But if that continues to work out that way, a lot of states will do the same. So not the way it is today. Think about presence when you think about where you should collect tax. I guess a big takeaway is this is gray areas, right? I would really highly recommend every year, January, just sit down, look at the states you're doing the most business in, and make sure you figure out, have we done anything that generates nexus there? Have they changed any laws that might trigger nexus for us there? Just know where is the biggest areas of tax revenue that we might be subject to collection on, and be careful there. Try to register before you trigger nexus. It's really hard to clean this up after the fact because there's always now you owe it if you haven't been collecting it. If you have not gotten registered and you did trigger nexus, there are some things you can do like voluntary disclosures. There's agreements you can make with states. Seek professional tax advice before maybe you just go get registered, because as part of registering, you're going to tell the state, this is the first day that I ever did business here. If that date is not the day that you're registering, you may be subjecting yourself to some back tax liability there. So be careful. So now you've been registered. That's the left pillar of that stool. Probably the most important one is just defining where you need to collect tax. When you know where you want to collect tax, you now have the obligation of doing the actual collection itself. And the first part or first component that I want you to think about is, what rate would I charge? Here in the United States, there are over 12,000 tax jurisdictions, and they are all crisscross and overlapping each other. At a single location, you can have 6 different rates that even would apply. I'm talking about states, counties, cities, maybe some sort of special transportation jurisdiction, or maybe there's a stadium tax that's near that. So they really can get complex, and we see them change all the time. We have tracked about 14,000 changes just last year alone in the rates and boundaries here in the United States. Now, if you're looking at what rate do I charge, you also want to be careful that in a lot of cases, a zip code rate table, a lot of people go online and try and find those. They're not really the best use to determine a rate. Zip codes are not used by taxing authorities to define rate boundaries. That's a federal level set thing for shipping and kind of cutting the world up into different jigsaw pieces. Taxing authorities are locally managed and administered. Just to give you an example, here I am in Colorado. I know that these numbers are pretty small on the screen, but in the purple and in the yellow are 2 completely different tax rates that would be assessed. One of them is at about a 4.85, and the next one is about 8.35. So it almost doubles, and then as you can see in some of these cases, from house to house. Just to give you some no rhyme or reason here, right? Maybe there's a bus stop right next to it. Maybe there was some old government official that lived there. They lobbied for some changes. There's just a lot of nuances from sales tax. So you want to try to find a way to get really accurate tax assignments and avoid uncollecting or overcollecting in these cases. Once you know what products or what rate to apply, you also want to make some decisions around what is or is not taxable. Jurisdictions do not agree with how to tax things. They are allowed to make their own laws around what is and isn't taxable. If it's a tangible good that you can pick up with a forklift, it's usually just taxable. We call it tangible personal property. But there's just millions of exemptions to this. Maybe I'll give you a quick example. Here we are in the state of New York, for example, and I'm selling these tall boots for $120, and I've got short boots for $90. One's cloth, one's leather. Now, if I had you in a room, I'd have you raise your hand and tell me which one you thought was taxable, but we'll just somewhat spoil this. The tall boots in this case would be taxable, and the short would be not. Reason being, though, not that one's leather or one's cloth or one's tall or one's short or the specific day of the year. It's actually, in this case, it's a combination that these are clothing items and that one of them is over $110. So you'll see that states will pass laws that also take into account the price. And here in New York says if it's over $110, that's a luxury clothing item and you should be taxing it. If it's lower than that, not luxury, and you don't need to tax it. So some really interesting cases here, that extra layers of logic that can kick in. I won't stay on this for too long, but this just kind of hopefully gets the idea that as you move throughout the U.S. or you have greater nexus exposure, the complexity of understanding product taxability astronomically will increase, right? These are always changing. It's very difficult to manage. Little things like, candy bars in Indiana will change in their taxability given, one extra ingredient of flour could change if it's taxable or not. If you had a bagel, if you sliced it versus kept it whole, it may or may not be taxable, just because of you've added that slice to it. So very, very unique laws that exist all over the U.S. So do I ever charge tax even if I have, or do not charge tax even if I have Nexus? The answer to that is absolutely yes. There will be cases where you have an obligation to collect tax. You're making a sale in a Nexus state, but there's a few reasons you might not. And I put 3 up here. One of them would be product-based. That's really when the state has said that is just not taxable. A lot of professional services are just not taxable. And so they don't need to do anything to prove why they're not charging tax. It's just, hey, I provide a service that is not taxed because the state says so. Now, that might not always be the case because a different state might have a different view on that service. Entity-based is where you're going to do business with someone like a school or a hospital or maybe a Native American tribe, and they're saying, hey, because of who we are, we're tax exempt. The state has told everyone that we don't need to be charged tax when we buy items. When someone like that does business with you, they should have a tax exemption certificate. It's a document that is a state-issued document that claims they're tax exempt for that reason. You should be requesting that document so that if you get audited and you get an auditor to pull a sample size and they look at that transaction, they say, why didn't you charge tax? Either show me a certificate or now you're liable. And so you want to have these little certificates available so that you can prove why you didn't. Same thing like entity-based, but different is use-based. I'm selling to someone who's going to then resell it. That would be a resale example. I'm going to sell to someone who's going to manufacture a good. Manufacturing exemption would apply. So again, in this case, you're going to want to make sure that you get a certificate from them, but the certificate's going to be a little bit different. It's going to be an exemption certificate for blank purpose. Very important that those documents be collected. So let's summarize what we've learned. The very, kind of a tax decision tree is a fun way to think about this. Very first thing on every sale, and this is how every sale you should hope to think of, is do I have Nexus? Am I shipping this product somewhere? Did someone come into my store and they said, actually, I want you to ship that to my niece in Texas? Well, actually, you don't have Nexus in Texas. You could send that product tax-free over there, right? That's where their ownership's going to change hands. That would be somewhat of a send sale scenario. So do I have Nexus, right? Yes or no? Let's say yes. You need to now think about the next step. Am I selling a taxable good or a non-taxable good? Actually, not good, but is this a taxable or non-taxable sale? Let's broaden that up a little bit. In the event that it's taxable, you now need to figure out what are the rates that I assign, what is the product taxability. Maybe it's partially taxable because of a law, or it's a special product that gets a new rate that isn't the same as the rate that's there. There are things like that out there. If it's a non-taxable sale, is it because it's a state law and I don't need to have documentation, or do I need to prove why I'm not charging tax in this scenario? So hopefully you can create somewhat a decision tree around that. Ultimately, though, you're going to want to have great documentation, right? You have the obligation to file these in the tax return. They're going to want to see taxable and non-taxable sales, full picture of what you've done in their state. They want a regular cadence of communication. Remember, even if you have $0 of sales in one of your states, still file that $0 return, right? It's something that you want to continue to stay in contact with. Don't flag yourself for an audit in a state. So are you doing all that today? Just kind of a little plug in here just to make this hopefully lighthearted a little bit is I want you to realize sales tax is really hard. This is not something that's simple. And we work very, very closely with a lot of accounting professionals here at Valera, and I'd say the majority of them agree that this is something that they absolutely hate, right? They even outsource it. Most firms somewhat try to use our service on behalf of their clients. They do not like doing this anymore. It's just gotten far too complex as more and more laws have stacked up. 52% of accounting professionals agree completing a marathon would be easier to accomplish than understanding sales tax laws. These are not the marathon type running people, I promise you. And really no one's enjoying to do this, right? You're not promoting the person who's doing sales tax in your company. You're never walking in and saying, wow, that return was phenomenal last month, good job, right? This is just a very thankless job that no one really enjoys. So another fun thing about this, or I guess not fun, somewhat sad, is that 44% of accounting professionals surveyed from our company think that being involved in a contested audit would be more stressful than divorce, right? They dread these experiences. So quickly, I know we are running somewhat near our end of the time and I want to give questions, but Let's say that you didn't want to do this manually anymore. You don't want to keep building rules, right? How could you automate the decision engine and create that decision tree on your behalf every time you process an invoice? That's what's been created here with this partnership with Paladin and Avalara. This is a very, very, very simple diagram, very high level, and I'll just quickly walk through it for you. But imagine that you're here, you're Paladin today, and maybe you have more than just Paladin. You've got an integration that you need for WooCommerce or QuickBooks or Sage, right? You could have 3 or 4 different places where you need tax decisions. Wherever those might be, you simply turn on what we call a connector here in our lingo. It's a piece of software that's been built for you. And that allows your transaction data in real time to flow through our tax decision engine, which we call AvaTax. We make real-time sales tax decisions, and we bring them right back into the invoice. If you imagine buying online in an e-commerce environment, that needs to be lightning fast, and that's how we operate. It has to be done that way. Otherwise, imagine Groupon. That would not work for them. We keep all the rates and the rules every day up to date. We understand if it's a tax holiday today, is that a threshold on that product or that service. Whatever that may be, you're never going to download or do any sort of changes. That's always going to be up to date in the cloud. And then from there, we'll even create and file and remit your returns on your behalf. If you're a do-it-yourselfer, you can always log in, pull your own reports, and file them yourself. Service, we do a whole lot of things in about 1/10 of a second. Just some quick highlights. We do address validations. We convert latitude, longitude coordinates because we don't want to use your zip code to figure out what rate should we assign. We must know exactly where that transactions are going from and shipping to. We reference your Nexus profile. Where does your business claim to need to collect tax? We understand all the rate assignment complexity. Sometimes you use the ship from, sometimes you use the ship to. Is there a tax holiday? Are there thresholds? We look at the products that you sell, identify, should they be taxed or not, given that state's legislation. And are you dealing with an exemption certificate? Is there a person that you're doing business with that has claimed tax exempt? I know I sped through those last 2 slides. I didn't want to spend a lot of time there, but I'd like to open it up and see if there's any questions. Maybe, Jenny, you could pop open a few question windows if there's anything there.
Sure. It doesn't look like anyone is saying anything right now, but one thing I will plug in that may be a question that people are not thinking about, but also people can listen to later, is how you actually sign up for Avalara being a Paladin customer. So
yep.
Paladin customers, right, from my understanding, Paladin just calls, our Paladin customers just call us, and then we take it from there. So it's really pretty simple as far as that goes. Am I missing? I don't think I'm missing anything as far as just their end goes, the simplistic.
Yeah, well,
there's stuff that we have to do, but.
Yeah, and there's a collaboration, honestly. So there's a lot of, just kind of trip-ups that we don't want a customer to run into. So we're going to have some questions for the customer around, your Nexus profile, kind of what's your SKUs, what do you sell, what are your products and services. We have a little bit of a relationship that needs to be created between your products and services and Avalara's tax research. That's a nice set it and forget it activity you must do kind of in the onboarding process. But for most customers, getting live with the software is very straightforward, very simple, and that's kind of the beauty of this connector strategy that we have here. So we take, I'd say, anywhere between 300 to 600 new clients on board with Avalara's tax engine every month. So as you can imagine, this must be streamlined for us to do that.
Right, and as far as that goes, again, Paladin people just call us, and then we take it from there, and then we'll get you set up. Now, fees associated with it, there are no fees on the Paladin end of things. We don't charge you to turn it on, or we don't charge you to call Avalara. As far as the Avalara side of things go, Jesse, can you maybe, I imagine it's different for every customer.
Yeah, and I'll maybe just back up a couple of slides to help articulate our fees. So we work in a usage-based fee system, and the reason we do that is that we give everyone the same tax engine, right? You're not going to get a different, less accurate, dumbed-down version. Everyone has access to the same one. So in order for this to be cost-effective across lots of different markets, we have a fee based around your transaction calls that you make to our service, and that's really the number of invoices that you finalize and that's actually the number of invoices only within your Nexus states. So if you have an e-commerce website and you do 100,000 orders a year, but only 3,000 of them happen in your home state of Texas, where that's the only place you collect, we're only going to look at that 3,000 volume. And so we would set you up with a monthly bill that would really align with your usage. And we are very scalable. At the low end of the market, you might spend more per transaction, but you're going to have a very low, small bill there. If you're at the high end of the market, you might spend a couple cents per transaction, but at the same time, you're now doing a much more broader scale project with Avalara at that point. We have also fees associated with the number of returns that we file. So we bill you every time we actually create and file and remit your return. If you're doing one a year, right, only get one bill for that. If you're doing on a quarterly basis, every 3 months. So we understand your filing schedule. That's another component of onboarding. We understand what states you'd like us to file for, at what cadence, and what form are we doing. And we're really able to streamline that process. So 2 usage-based fees. They're all kind of scaled. As you're in the lower market, the cost per unit might be a little bit higher, but you're going to do far less of them. As I mentioned, I think our largest user base is QuickBooks, and a lot of our pricing is online as well for those integrations. So hard to say one answer for that. I'd love to talk to anyone if they wanted to get exact pricing.
Right. And then I think one more thing I just wanted to touch on, just to try to cover a little bit of basis. That way people can go into this with as much understanding as possible. When it comes to our Paladin customers calling in and saying, hey, I want this integration with Avalara and things like that, the whole point of this is to be a worry-free tax solution, because taxes, like you said, can be a headache. Now, am I correct in saying that if the risk is ran of being audited, or if there are any questions that come up, that is something that Avalara takes care of if they're integrated? Is that correct?
Yeah, you have a support agreement with Avalara as a customer of ours, and so you have Avalara at the ready when you need to call around a tax decision that wasn't right, or that a customer said, I don't think that was the right rate. You would just pick up the phone and call us. We do guarantee our sales tax decisions to be done correctly. We offer a guarantee to back those. So if, for example, you had a negative audit and it was actually our rate or our rule that was incorrect, we'd be liable for the cost of an annual service agreement. We also guarantee that the returns have been done properly and done on time. We will not have any late penalties or fees there. We would be subject to those should it be our fault. We'll also answer any tax notices and get you a filing archive. So you've got a lot of great documentation. When an auditor shows up, you're able to log into your account and say, okay, what state am I being audited by, and what window do you want to see the transactions from? They usually like to take a sample size, and they want to look at the returns. That's all available really at kind of a touch of a finger for you in your account. Most auditors come in and see you have a really awesome repeatable process in place. Their ability to find a little margin of error is very small. They're not, they're like sales reps, like I said, right? They're going to see, I'm not going to find a lot here. They're hopefully in and out of your hair really quickly. Just some validation around our accuracy. We were the first business to ever create that accuracy guarantee. There are over half the tax collecting states that we are a certified provider for, meaning they actually give us all the rate and rule information before they release it. There's 5 states that use Avalara internally to help manage their own rates and boundaries. So in some cases, you might be audited with the same software that you're using. So.
Great. I don't think we have any more questions, and it sounds like we covered most of everything. And again, if people do have questions, they can call Paladin directly, or they can absolutely call you if they have any Avalara specific questions, but just sign up for it. Just give Paladin a call and we can take the hassle out there for you guys as well.
Yeah, absolutely. And just kind of signing off here, but I want to thank everyone for your time. And just the last parting words, right? Don't wait till this is too late. Kind of a silly picture there, I know, but that's often what we see people doing is they put their head in the sand, and we get calls all the time from someone crying, right? They've gotten caught, and right, they might lose their business, or they just can't afford this, and they're on the hook for it. So just be aware of your liabilities. Ignorance is not going to protect you from these sort of sales tax implications. And when you're in doubt, seek help, right? You can call Avalara, you can call Paladin. There are great tax professionals out there. You can get Nexus studies done for you so you can figure out where should I be collecting tax given my business activities. So lots of awesome resources. Please do not be shy. We'd love to help you. So thank you very much for your time. Thank you, Paladin. Thank you, Jenny, and appreciate everyone spending some time with me this morning.